In a stunning development that has gripped financial markets, consumer sentiment toward the stock market has nosedived, recording the largest four-month bearish swing in history, as revealed by a striking chart from Bespoke Investment Group on X. The conference board's net stock price sentiment, a key indicator tracking consumer expectations for stock prices over the next 12 months, cratered from a peak of record bullishness to a deeply pessimistic -43.9 net bearish reading by April 2025. This dramatic shift, detailed in Bespoke's post on April 29, 2025, has sent ripples of concern through Wall Street and beyond, with 48.5% of surveyed consumers now anticipating a decline in stock prices, the highest level of pessimism since October 2011. The rapid erosion of confidence comes against a backdrop of intense financial market volatility throughout April. According to the conference board, consumers are increasingly rattled by a confluence of economic uncertainties, including persistent inflation pressures and fears of a looming U.S. recession. The conference board's consumer confidence survey highlighted a sharp rise in recession fears, with the proportion of consumers expecting an economic downturn hitting a two-year high. Inflation and the high cost of living remain top concerns, though some noted slight relief from declining gas and food prices. However, the overriding sentiment is one of unease, with many pointing to stock market uncertainty as a major factor. Global tensions are also playing a significant role in this sentiment shift. Recent geopolitical developments, such as escalating India-Pakistan border tensions following a deadly terrorist attack in Kashmir, have heightened fears of broader instability. While this has sparked a rally in defense stocks, the overall market mood remains jittery. Historical parallels from web sources underscore how geopolitical events like World War I in 1914 or the September 11th attacks in 2001 have often triggered market volatility, with initial declines driven by fear and uncertainty. Yet, history also suggests that such shocks are often short-lived, with markets typically recovering within months, as noted by financial experts cited in recent analyses. Adding to the complexity, web sources reveal that market volatility can stem from multiple triggers, including unexpected economic news, shifts in Federal Reserve policy, and swings in investor sentiment. The current environment appears to be a perfect storm of these factors, amplified by global events and domestic economic concerns. Financial advisors, as cited in related reports, recommend maintaining a diversified portfolio and resisting the urge to panic sell, emphasizing that long-term strategies often weather such storms more effectively. Social media reactions to Bespoke's post paint a vivid picture of the market's emotional roller coaster. One user summed up the mood shift with a quip, "From to the moon, to hide your assets in a blink," while another reported a 2% drop in the market, reflecting the immediate impact of the sentiment swing. Amid the gloom, some investors shared success stories, crediting stock picks from traders they follow on X for significant profits, highlighting that opportunities still exist for those navigating the volatility with care. As financial markets brace for continued uncertainty, this historic swing in sentiment raises pressing questions. Is this merely a temporary dip driven by short-term fears, or are we on the cusp of a broader market correction? Economists and investors alike are closely monitoring upcoming economic indicators, such as inflation reports and Federal Reserve statements, for clues about what lies ahead. For now, the dramatic shift in consumer sentiment serves as a stark reminder of the fragility of market confidence in turbulent times. Stay tuned as this unfolding story continues to shape the financial landscape.